want to watch out for. But let's put the focus on a Mastek. Came out with its numbers about half an hour back. Flat top line coming in, EBIT is up 4.7%, margins have improved slightly, bottom line is also pretty much flat. North America revenue is down, UK revenue has gone up. John Owen, Group CEO at Mastek, is joining us to talk about those numbers. Good to have you, John. Let's get your highlights of the quarter. Q4 is seasonally soft for the industry. What were your highlights this time around?
Well, I think fundamentally we're still building the platform of our Vision 2020, which is about repositioning Mastek to be a leader in digital. So I think I'm pleased that our digital revenue has moved up from 82 to 84%. I think, as we previously said, we're resetting our business in the US. It's a relatively nascent business, but again, the digital commerce element of that's the part of the business that's going to be really exciting in the future, grew modestly at about 1.5%. And we did see some legacy IT decline and take the revenues down. I think in the UK, I mean, everything's dominated by Brexit, and there are certainly modest Brexit sort of headwinds, and I'm pleased that we've been able to grow in that context. So overall, I would say it's been a modest quarter, but we're still on the good trajectory. It's our 12th consecutive quarter. So fundamentally, if you put it in that 2 to 3 year vision that we built and the plan we're building, we're executing. But yes, I would say it had been a modest quarter relative to our recent performance.
Give us a sense here. You said the pie of digital continues to go. In terms of the deal wins that come in digital versus the legacy business, are they usually lower ticket size revenue opportunities? And what's the kind of margins that you enjoy in digital versus the legacy business?
Well, I think the legacy, we don't compete in legacy business anymore, but we do have some old contracts that are either retiring, ramping down, or we're modernising them to digital. So to answer your question directly, digital contracts originally were smaller in scope, they're more dynamic, and in digital it's all about the time to the business impact. So contracts tend to be smaller, they tend to be shorter in duration, and the benefit of that is they get decided quicker. I think that's, if I look at our average order value, it's moving up gradually. I'd like to see it move further, but I think where we are on this 3-year journey, I think our customers have more confidence to give us bigger projects, and as we demonstrate that we can scale with them, that will increase. So I think digital projects used to start at sort of $500,000, $1 million. They're now getting into the high single digits, early double digits for a company like Mastek. But obviously, as we build a track record and customers build confidence, I expect those contract values to go up.
Right. There were 7 new clients added in this quarter. Just give us a little color on that, and of course, the kind of momentum that you're targeting for deal wins in FY20.
So I think the new logos, ironically, we won more new logos in fiscal 19 than we have probably in the last 3 years as an organisation. And that was part of our strategy. Year 1 was about transforming and fixing the business. Year 2 was about winning, and that's what we've just exited with fiscal 19. And fiscal 20 to come onto that is our growth year, and that is where we will use our balance sheet assets to grow and accelerate. So we'll both combine organic growth and inorganic growth to accelerate our growth.
All right. I have to ask you about Majesco. Of course, there's all sorts of reports doing the rounds. But what's the view? Are you exiting Majesco? Are you looking to offload that? What's happening?
I think we've always said Majesco is a legacy investment from the divestment. What we've always said is our core business is about building a digital business. So it's logical that when the price is right at the time, we will use that investment in our core business of Mastek. When that time is right, we'll announce that. But at the moment, the direction of travel is, yes, we want to put all our assets into our growth business as Mastek.
All right, but have you identified a potential buyer? Are you in talks? Are you in negotiation? Has there been any development on that?
I think if you look at the business, there is good traction. I think they're doing well. But we will basically execute on that strategy when the time is right.
And whenever that execution goes through and that deal is finalized, how would you direct the proceeds? I mean, would you look to build internal capacities? Would you look for an acquisition? Any options towards utilizing that cash as and when it comes in?
I think, as I said, we've always been transparent. That cash is better in our business than anybody else's. It's what we manage, and I think if you look over the last 2 years, we've used our cash well, we've grown, we've driven profitability. So the logic is, yes, as we go into our growth year, we will use all assets to grow Mastek faster than the market, and hopefully that will deliver us a better top line and a corresponding better quality of earnings. So yes, we will always use our funds to grow our business.
Right, John. Thanks so much for joining in. Good luck for the year ahead, and of course we'll try and get more updates from the company as and when the stake sale in Majesco happens. That's Mastek for you. A quiet quarter this time around, but as the company says, they're building the base for future growth, and this was one of those quarters that helped them set that base as well. But away from the market action on the political front,